This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Wednesday, July 29, 2026, and this is the After Hours session. Now, let's get into it. Bitcoin is frozen at $63,872, while the broader crypto market bleeds red, and the Fear and Greed Index has plunged to 14 out of 100. We are witnessing a market trapped in extreme fear, yet refusing to crash, a standoff between exhausted sellers and absent buyers. Let's break down the data.
That's right, we're seeing a classic capitulation exhaustion signature. Sentiment is at absolute rock bottom, yet the anchor asset isn't moving. It's a liquidity vacuum where the absence of bullish conviction is merely neutralizing bearish pressure. We've got a structural bifurcation happening. Legacy infrastructure is attracting defensive capital, while high-beta layer ones are suffering from pure risk-off rotation. Let's get into the weeds.
First on the agenda for us today, looking ahead to the immediate horizon, we have three key data releases coming up. On July 30th, we'll see the Gross Domestic Product Report, along with initial jobless claims and the PCE price index. These figures will help clarify whether the soft landing narrative currently priced into the 18.67 VIX is holding water or facing a stress test. But right now, the market is reacting to what's inside the crypto ecosystem, specifically the massive divergence between sentiment and price action. It's a textbook decoupling. The 14 out of 100 reading captures the pain of altcoin depreciation and liquidity withdrawal, not an imminent crash in Bitcoin itself. The 7-day trend is sitting at 12, meaning this fear is intensifying, but the 0% change in Bitcoin's price tells me sellers are currently exhausted or simply capped at this level. If this were a true breakdown, Bitcoin would be dragging the whole index down with it. Instead, we're seeing a slow bleed where capital is fleeing high-risk exposures into defensive positions like cash or stablecoins, rather than exiting the ecosystem entirely. The risk is asymmetrically skewed toward further altcoin compression before any Bitcoin upside can resume. So the fear is real, but it's concentrated in the smaller caps. Grid, let's look at the charts. Bitcoin is holding that pivot point at $63,872 with zero momentum change. What does the technical structure tell us about this stability?
The structure reveals a classic safe haven consolidation. Bitcoin is refusing to engage in the negative 0.9% correction seen in Ethereum, thereby establishing a hard floor against the negative 28% drawdown in high-beta assets like Avalanche. It's absorbing liquidity rather than rejecting it. Meanwhile, look at Uniswap. It's trading at $4, up 22 basis points, that's a plus 2% gain. That provides a clear technical breakout level from its previous consolidation zone, contrasting sharply with the negative 4.4% collapse in Filecoin. We are seeing a defensive anchor in place, but it's fragile. The volume distribution tells the truth. Of the 69.05 billion in 24-hour volume, the lack of directional velocity in Bitcoin combined with heavy selling in low-cap assets indicates that current volume is primarily exit liquidity for speculative positions, not entry liquidity for upside.
And that brings me to the flow side of things. Capital is actively fleeing speculative Layer 1 infrastructure and migrating toward regulated settlement layers. You see that in the divergence between the 56.50% Bitcoin dominance and the outperformance of XRP, which is up 0.5% at $1.07. It's the only major cap asset posting gains. Concurrently, the collapse of Bitcoin futures demand to 2024 lows indicates that institutional leverage is being stripped from the system. We are leaving spot prices anchored at $63,872 without upward momentum. Core Scientific's post-quarter 4 drop also reflects broader mining infrastructure stress, confirming that the supply side of the crypto economy is contracting profitability.
CIPHER, you mentioned the collapse in futures demand. That's a critical piece of data. SPECTER, how does that derivative vacuum change your risk assessment of this flat price action?
It changes everything. Most people look at the flat price and think support. I see a derivatives vacuum. Bitcoin futures demand has collapsed to 2024 lows, stripping the market of leverage support and leaving spot prices vulnerable to sudden sell-offs without the cushion of open interest. With the SIBO VIX remaining contained at 18.67, yet crypto sentiment at extreme fear, we have a decoupling where crypto investors are pricing in systemic risks far exceeding current equity volatility. This isn't accumulation, it's exhaustion. The flat price action in Bitcoin is not accumulation but exhaustion, leaving the $63,872 level exposed to further erosion as altcoin liquidity drains away. Ignore the tokenization headlines for a moment. When futures demand hits multi-year lows and altcoins bleed double digits, the only rational play is to preserve capital until leverage returns to the market.
So we have a market stuck in limbo. Let's dig deeper into specific assets to see how this dynamic plays out. First, let's talk about Bitcoin. It's at $63,872, unchanged. Grid, you mentioned support integrity. CIPHER, you're pointing to empty futures books. How do we interpret the current state of Bitcoin's order book?
Technically, Bitcoin remains anchored exactly at $63,872. It is refusing to engage in the negative 90 basis points correction seen in Ethereum. This establishes a hard floor. However, I am challenging Apex's synthesis of structural adoption here. The negative 2024 lows in futures demand visible in the order book depth suggest that institutional turning points are currently being met with passive absorption rather than aggressive accumulation. The flat price action at $63,872 is not necessarily a bull flag. It is equally consistent with a liquidity vacuum waiting for a catalyst to trigger a cascade if support breaks.
I agree with Grid on the observation, but I'm challenging his interpretation of the mechanism. With futures demand at 2024 lows, technical chart patterns are currently irrelevant because there is no leveraged capital left to defend those lines. The market is not testing support, it is testing spot absorption capacity. Until futures demand recovers, price discovery is broken regardless of where the 4-hour moving averages sit. We aren't seeing a battle between bulls and bears, we're seeing an empty arena.
And from a sentiment standpoint, this emptiness is driving the fear and greed index to 14 out of 100. But remember, this score is capturing the pain of the altcoin bleed, not Bitcoin instability. The fact that Bitcoin hasn't dropped despite the 14 score suggests that at this specific price, the selling pressure is neutralized. We aren't seeing panic selling in the primary reserve asset, we're seeing apathy. Okay, so we have an empty arena with a flat price. Let's move to Ethereum. It's at $1,904.97, down 0.9%. Ethereum is clearly lagging Bitcoin here. CIPHER, where are the flows going in relation to Ethereum?
Ethereum is bearing the brunt of the liquidity withdrawal. As capital flees speculative layer 1's, Ethereum's relative underperformance compared to Bitcoin's flatness suggests that smart money is de-risking from the secondary layer. We are seeing a migration toward regulated settlement layers like XRP and established decentralized finance protocols like Uniswap. Ethereum is caught in the middle, lacking the defensive narrative of Bitcoin or the structured utility of Uniswap. Unless we see a recovery in futures demand that specifically targets Ethereum's open interest, it will continue to bleed against Bitcoin's stability.
Technically, that makes sense. Ethereum is failing to hold the $1,926 intraday high. The lack of volume on the upside confirms weak hands. If Bitcoin holds, Ethereum needs to reclaim that high to prove it isn't just trailing the market's weakness. Right now, it looks like a breakdown candidate if Bitcoin slips.
Let's talk about Uniswap. It's at $4, up 2%. This stands out as a relative winner in a sea of red. CIPHER, what's driving this flow?
Uniswap is benefiting directly from the defensive rotation I mentioned earlier. In a risk-off environment, capital prefers established, compliant settlement networks over speculative growth. Uniswap is up 2.2% precisely because it is viewed as a quality asset with predictable fee revenue, unlike the high beta L1 that are getting sold off. We are seeing inflows into decentralized finance leaders as a proxy for safety. It's not speculative frenzy, it's structural allocation.
That aligns with the chart. $4 is a key psychological level. A break and hold above that resistance validates the rotation into decentralized finance. If Uniswap holds above $4 while Bitcoin hovers at $63,872, it confirms that capital is rotating into utility, not just hiding in Bitcoin. That's a strong relative strength signal.
Be careful. Just because Uniswap is green doesn't mean the risk is gone. The total market volume is 69 billion, and if Uniswap is rising solely because everyone else is falling, it's a relative winner in a losing game. The risk here is that if Bitcoin's support breaks, Uniswap's correlation to Bitcoin will snap back, and it will fall faster than the average altcoin because it's leveraged to crypto sentiment anyway. Don't mistake defensive rotation for bullish momentum.
Fair point. Let's look at XRP. It's at $1.07, up 0.5%. It's the only major cap asset in the top tier showing positive price action. Pulse, how does the crowd view XRP right now? Market sentiment around XRP is mixed. It's being used as a shelter asset. When the fear and greed index is at 14, traders are looking for anything that isn't correlated to the general crypto chaos. XRP's slight uptick suggests it's acting as a store of value for those exiting other positions. However, the intense fear suggests that this is a fragile shelter. If the geopolitical tension surrounding the 70% spike in Iranian crypto outflows escalates, XRP could see rapid outflows as well. It's a safe harbor only as long as the storm seems distant.
I'd add that XRP's flow is tied to regulatory clarity. Unlike the speculative L1s, XRP has a clearer path to institutional use cases in cross-border payments. The headline about PayPay seeking an $1,100 million Nasdaq IPO with 40% ownership of Binance Japan is a massive validator for traditional finance integration. XRP is positioned to benefit from that legitimation narrative more than Ethereum or Solana right now. It's not just shelter, it's a bet on regulatory acceptance.
Technically, XRP is holding its base. $1.05 appears to be the recent support zone. It hasn't broken structure like Avalanche or ICP. That consistency is why algorithms and flow traders are keeping it bid. It's the only one not making new lows.
Let's touch on the news impacting the sector. We have several headlines. Cointelegraph reports that Iranian crypto outflows have spiked 700% following U.S.-Israeli airstrikes. CoinDesk notes that PayPay, 40% owner of Binance Japan, seeks up to $1,100 million in a Nasdaq IPO. And Cointelegraph highlights that TD Securities sees NYSE tokenization as an institutional turning point. CIPHER, take the PayPay IPO. What does that signal for flow?
That is a massive catalyst for traditional finance integration. When a company with such deep ties to Asian crypto markets files for a Nasdaq IPO, it signals that the regulatory friction is lowering. This validates the entire ecosystem. However, in the short term, with futures demand at 2024 lows, the market is too risk-averse to immediately price this in as a rally. Instead, it reinforces the structural adoption thesis for longer-term holders, even as short-term traders flee to cash. It supports the case for holding Bitcoin and regulated decentralized finance like Uniswap, but it won't stop the immediate bearish pressure on speculative assets.
I'd caution against over-indexing on the PayPay IPO as a near-term driver. We are in a state of extreme fear with a 14 out of 100 index. News likes a good IPO story, but the market is currently pricing in geopolitical risk. The 70% spike in Iranian outflows is a wild card. That kind of erratic volume complicates clean on-chain flow analysis. If sanctions tighten or volatility spikes, even IPOs might not provide enough buoyancy to lift the broader market. The risk is that this good news is ignored until the macro picture clears up.
Another headline, Cointelegraph reports that Monad's CB-BTC bridge may add $5 billion in Bitcoin-backed liquidity. Grid, Does that liquidity injection change your technical outlook for Bitcoin?
$5 billion is a significant amount of locked liquidity. If that bridge becomes active, it reduces the circulating supply of Bitcoin available on spot markets, which theoretically supports the price. Technically, this adds a hard cap argument to the $63,872 support level. If liquidity is locked away, selling pressure decreases. However, since futures demand is at 2024 lows, that reduced supply isn't being matched by increased demand. So while it prevents a crash, it also prevents a breakout. It keeps Bitcoin in that box.
Let's look at the broader market context. The VIX is at 18.67. ApeX tie this all together. We have extreme fear, flat Bitcoin, falling altcoins, and some positive structural news. Where are we really?
We are in a structural stall. To summarize, Grid has identified that Bitcoin is holding $63,872 due to absorption, not aggression. CIPHER has shown that capital is fleeing high beta L1s for regulated settlement layers like XRP and Uniswap. But SPECTER rightly warns that without futures demand, which is at 2024 lows, this stability is fragile. Pulse noted that sentiment is at 14 out of 100, driven by the altcoin bleed, not Bitcoin failure. So the market is consolidating at a local bottom, formed by the collapse of futures open interest. The risk is skewed toward continued sideways compression or slow bleed in alts until spot volume exceeds the current $69 billion threshold to validate a reversal. We are waiting for the dust to settle.
So the takeaway is clear. Bitcoin is holding the line at $63,872, but it's doing so in a void of leverage. Altcoins are bleeding, with the exception of defensive plays like XRP and Uniswap. Sentiment is at extreme lows, but the price action suggests a temporary equilibrium. Tomorrow, we'll be watching the GDP and PCE data to see if the macro environment supports a breakout or pushes us further into this consolidation. Stay tuned. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the Tokyo session where we will see how these calls play out. Until then, trade safe.